Hey there, YouTube fam. Today we're diving into the world of real estate and talking about smart investments in financed properties. So buckle up, because we're about to go on a wild ride. Now, when it comes to real estate, financing can be a game changer. It allows you to leverage your money and potentially score big returns. But how do you make smart investment decisions in this space? Let's break it down. First, it's crucial to conduct thorough research. You need to understand the local market, analyze trends, and identify potential investment hotspots. This will help you make an informed decision and ensure that you're investing in the right property at the right time. Next, consider the financing options available to you. Look at different banks, lenders, and mortgage brokers to find the best terms and interest rates. Remember, a lower interest rate means lower monthly payments and more cash in your pocket to reinvest or cover unexpected expenses. Another aspect to keep in mind is your investment strategy. Are you going for a fix and flip or a long-term rental? Each comes with its own set of considerations, so tailor your financing approach accordingly. For a fix and flip, short-term financing options like hard money loans might be more suitable, while traditional mortgages work well for long-term rentals. Speaking of rentals, do your due diligence when it comes to rental income projections. Take into account the local rental market, vacancy rates, and potential rental income growth. This will help you determine if the property's rental income can cover your monthly mortgage payments and leave you with a positive cash flow. Furthermore, don't forget about the importance of a solid contingency plan. Unexpected repairs, vacancies, or changes in interest rates can throw a spanner in the works. So always have a financial cushion to handle any unexpected situations that may arise. Finally, think long-term. Real estate is all about playing the long game, so make sure your investment aligns with your financial goals and risk tolerance. Patience is key, as the value of the property may appreciate over time, building equity and increasing your overall return on investment. Remember, folks, smart investment in financed real estate requires careful analysis, research, and a keen eye for opportunity. Stay informed, be mindful of your financing options, and always have a contingency plan. With the right strategy, real estate can be a lucrative and rewarding investment. So go out there, do your homework, and start building your portfolio. Happy investing!